probably moving at a much, much faster pace because we are going to be combining a lot of the basic stuff we've already shared or gone through. Okay? So if what I have on the board appears to be a repetition, you'll have to forgive me because that is normally my strategy, my style of teaching. I normally pick up from the last thing we talked about, give a quick overview as we continue, and I try to connect the dots. So we have been talking for the last 3 classes, we have been talking a lot about structure, the market structure. And today we're just going to go a notch higher on that market structure. Now that you know what a market structure is. So of importance, I will probably just go through the points as I have highlighted on the screen. This probably will be one of your probably single most important classes in Forex. Why do I say that? I say that because it is a culmination of many ideas put together for us to even have this session. Now, I will say this for free. It is very unlikely, even in the Forex books that you read, that you'll find all these things together presented at one point in time. So because there is no proper curriculum of Forex, this took a lot of my own research, putting the ideas together so that we can have this class. Hence, I always say the value that you get for most of you here is not so much to watch the video, but rather to be present in the class. Because when you're present, you get the opportunity to ask questions, live questions, which you don't get when you just view the recording. Yes, you can watch the recording 10 times, okay? But it's different from being in class. So, and I'll tell you guys something interesting. I always tell my students, even when I used to teach at the university, that my classes are going to be the easiest classes you'll ever have in an institution. Yet, they will be the toughest classes to pass, because the passing of the exam will not, even if you had a Kenya and all those things, they won't help you. For me, the classes, you will pass because you attended, not because I take the register, no, but because I spend my time, I spend the entire hour of the class explaining, teaching, so that by the time we leave that class, I am confident you are aware or you know the material. Okay, and that's how you learn. You learn by sharing and discussing and so on. So, having said that, very quickly we'll jump to the topic. And so today we're talking about the trading the market structure. So trading the market structure means, yes, I've been talking to you about the markets. The markets go up and down, up and down, up and down, and so on. And it is not, nobody can say with certainty that it goes in this way, okay? Or exactly like that. No, we just know that, yes, at some point it is down, and at some point it is up. And for you knowing that to me, that's it. That is Forex. So what is our response? Our response is just to know, okay, if the market is down, I know I'm supposed to buy. If the market is up, I'm supposed to sell. The question is, how do you know when the market is down? How do you know when the market is up? That, my friends, is what will distinguish you and differentiate you from everybody else on what Forex is. So, I have mentioned about higher time frames, and we said that the time frames help us. They help us to determine the direction of the market. Okay? So, in general, the direction of Kisumu from Nairobi is the west. If a plane takes off from JKIA or Wilson and they face the west, well, it's more likely they're going to Kisumu and not Mombasa. If they face the opposite direction, it's more likely than not they're going to Mombasa than Kisumu. So the higher time frame in Forex, if you're using our strategy, which is basically trading by looking at the market structure, okay, and we call it purely price action or naked Forex, okay, then you will use the higher time frame to tell you the direction. So the higher time frame again is relative in the sense that for us, as we are going to be studying, the higher time frame is anything from 1 hour, 4 hours, daily, etc. Which means if you go to the charts, you'll see the 1 minute, 2 minute, 5 minute, and so on and so on and so on. But for us, because we are learning to be what I call day traders, specifically scalpers, okay? Scalper is a day trader who goes in and out of the market several times a day, in and out, and makes some profit. So for that person, the 1 hour, 4 hours, the daily charts are considered higher time frames, which help them or helps the trader to determine direction. Okay? So there you learn by using what we call trend lines. So if I can do something here quickly, you're familiar with this by now. Let's see. All right. So in any time frame, it goes up, down, up, down, up, down, up, down, like that. All right. So you draw your support line, and you draw, sorry, your resistance and support lines. So if this is a 1 hour daily or 4 hour, if you look at these lines, depending on how those highs are being formed, if they're being formed and getting higher, higher, and higher, then we say that it is on an uptrend, right? If it's going lower, 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 then we say it is on a downtrend. I think in one of the classes we did discuss that. We did discuss the, okay. So we use the higher time frame. I think you're all here. Some people keep getting kicked out. All right. Now then we use the medium time frame to determine the structure, where by medium, I mean for the longer time frame, or rather with reference to the daily 4 hour and 1 hour, then it is a little lower. Okay, so we talk about, okay, people having challenges. Okay, sorry, some guys are, I just want to repeat that no, normally I don't set passwords on these classes. I normally set it so that I get to admit you as you come in. Hence, there are no passwords. But I keep getting people asking me for the meeting ID, password. Okay? Please remember, yes, the password is there and all those things, but I manually admit you. Hence, you do not need passwords. Okay? All right. Okay.
But
So, uh,
I think they're asking so because what you send, we just click and join. But then some of us are using laptops. Like I had to copy it to my email, then open it in
oh,
my laptop. So I think some people haven't understood that maybe.
okay.
Yeah.
All right. Okay. All right. Sorry for those people who haven't understood that, but I thought by now you should have known the drill. Yeah. All right. So I think now we'll go a little quicker. So I've mentioned to you guys that when the market is going up, okay, or down, there are a few things that are significant. Okay. So if a market is going up, then it has this kind of look where it goes higher and higher and higher and higher. Okay. And the definition of that kind of movement is when the highs are getting higher. So if this is a high and this is a low, so then this is a higher high, higher high, and this is a higher low, and this is a higher high, and this is a higher low, higher low, etc. Higher high, higher low, higher, higher, and so on. If it's then if that happens, then we say the market is on uptrend, right? Similarly, if it's going low, and lower and lower and lower, okay, so that if this is a higher low, or this is a high, and this is a lower high, okay, lower low, sorry, lower high, and this is a lower low, sorry, okay, so lower high, and this is a lower low. The fact that the last low, the next low is lower than the last high, that's the definition of a downtrend. So again, that's a quick overview, quick review, which you already know. Okay. So in Forex, we take advantage of that knowledge. And then we say that we use the smaller time frame to enter our trades. Those are three things that normally nobody will tell you, at least easily in terms of strategy. Okay. But for the strategy I'm teaching you to use the higher time frame to determine your direction, and to use the medium time frame to determine the structure that you will use, and use the smaller time frame on entering. So what do I mean by determine the structure, medium time frame? Well, I mentioned to you that at any given time in a market structure, okay, when the market comes from down going up, or from down or from up going down, then you have the opportunity, okay, let's say it's going up, you have the opportunity to actually analyze further. So this is, let's pretend it's coming from a low and it's going high. So it's going up like that. Okay, where this is one price cycle from one bottom here to up there. Okay, so here we can say there is some resistance. Okay, and down there is some support. Now, it might appear very basic, but there's a lot of important information here. When the market moves from down here to the top, it doesn't just move in a straight line. It's not like one straight shot. No, it goes up, then down, then sometimes spends some time in the middle, and then goes up again, and so on. All right, which is what I had alluded to before in the first few classes, that this is what we call the structure. It's up to you to figure out the structure of that market. How? By looking at the chart patterns I have shared with you. So this market might start on an uptrend. Okay. In the Forex, when it's going like that, we say it is trending. Okay. Or it is in an impulsive phase. Okay. So the market moves in basically two phases. The impulsive phase, which means it's going up, 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 or down, 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 right? Sometimes people call it trending, or sometimes people call it expansion. And it does that about 25 to 30% of the time. So when people say that, oh, I am a trader, but I only trade the trends, well, the market trends only about 30% of the time. The remaining 70% of the time, it is doing what many people don't like. Okay? It's doing what we call corrections or consolidations, okay, or contraction. So the market might come from down here, and yes, it is trending, and then suddenly it stops trending. Okay, it forms a strange pattern. We call that consolidation, where it suddenly stops and just moves up and down around a certain area. Okay, so at this point, the market might decide. Remember, it's not at the support, neither is it at the resistance of the top, but it's somewhere in the middle. It might decide to, it's like thinking, should I continue up or should I go back down? Whichever the case, you don't care. All you know is, yes, it forms a structure here, and then one of two things will happen. It might either continue, and in that case, you will see a pattern being formed here. And that pattern is a continuation pattern, which I've shared with you in your charts. Or it might decide to turn back. Okay, and in that case, it's called a reversal pattern. So if you look at the patterns I have shared with you, it has a lot of continuation and reversals. So those continuation and reversal patterns are more likely to be seen in the middle of the charts. Well, mostly continuation. Well, and even reversal, that's true. Yeah. But you see, within the structure of the market, okay, you're likely to see them in the middle there. Unless this is happening at the top here. If it's happening at the top, then for you again, your expectation now will be different. Okay, if the market comes at the top here and does not come down right away, but instead decides to consolidate, then guess what? It's very likely that it might continue or reverse. Okay. Similarly, if it was down here and the market had come down, because it is at support zone, it will consolidate, assuming it doesn't go back right away. In a very volatile market, it will come and it will go back right away. But in a normal, typical market, it will consolidate as it makes up its mind that it should go back or should continue. And those charts you have will help you. Will give you an idea. You'll be ready. You'll be expectant. And that is the power you have now as a trader. Now that we know what the market is about to do, specifically, then what do we do? And that's the third point, which is you enter your trades. All right. So, quick summary: we use the high time frame to determine direction. Okay. So, if you know the market is going up, okay, like without the middle things here, if you look at the support and the resistance, the market seems to be on an uptrend. Okay. If you look at the up, down, up, down, seems to be an uptrend. So, from point number one, we have determined the direction. Okay. That's from the previous history. And then number two, we go down to a smaller time frame to determine the structure that is being formed. And then finally, we decide, once we know the structure, we decide how we shall enter. And how we shall enter is now entering the trades. That's when you buy and sell. And many of you have been wondering why. Sometimes a lot of your trades are all negative, 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 negative. Well, the reason is because when you start entering, you're entering in the wrong direction. And that's why you lose heavily. But if you knew all this before you entered, chances are your entries will be what we call razor sharp. They'll be better, clearer, and more often than not, profitable. All right. So I'm going to quickly jump into the chat and just re-emphasize those 3 points. Okay. Unless somebody has a question. Okay. So So as I open the chat, I am hoping that you've had a chance to look at the charts the patterns I had sent you, okay? Because those patterns will really help you if you focus on them. Okay? So in the remaining time, I'll go through some of the patterns, okay? And then we'll also go through the live market. So you're probably wondering about let's see, not this one. I'm still trying to share something. Okay. Okay, so if you look on the screen, this is what I mean. This is the kind of thing that you're likely to see when you go to the markets. Okay, this kind of patterns. It's up to you now to start studying that when you see a chart moving like this, okay, uh, it's called a double top. What's the name of the chart? Remember, to me, I don't care that you memorize the names or what, but just try and get familiar with them. So when the market goes up like that and down and up like that and come down, that structure tells you that it's very likely that the market will actually ride downwards. Okay? So the market is likely to come down like that. Okay? In fact, how far down, it will even tell you that distance there. That's how far the market is likely to come. So your take profit might be somewhere there. Okay? So when you see this there and that, that's called a double top. So the market comes like that and down and up and down. When you see that, you quickly enter because you know this is all nothing but profits. Imagine how many pips you would make daily if you knew that, okay, when we started. But the good news is it's not too late. This is the way we learn. The first day we just play around with things, but now we are learning. So there's double top, then there's double bottom, same thing. Okay. If the market is going down, up, okay, again it will break downwards, as you can see. Okay. Inverse head and shoulder, the same thing. Okay. I'm just going through this quickly because I don't need to walk you through it. Okay. I just need to give you an idea how to use it. So in the market, and this is what we call the structure. If you want to ask on a smaller time frame, you look for these things, and when you see them, they will help you make your next move. All right. Okay. So when you see something forming like that, it's forming like a wedge. Well, chances are it's either reversing or continuing. All right. And this is what you get. Okay? When you see something formed like a rectangle like that, the same thing, it breaks down and goes down, or consolidates and then breaks down. So they're all there. All those are things that are formed during the phase of the chart pattern, which we consider the structure, not the structure, but I said the first time frame helps you in direction. The second time frame helps you identify the structure. So something will be formed. So this is what will be formed. Now for you is to identify what is being formed and you trade in that direction. Okay. Now this will only happen, will become part of you with practice. With practice, they'll become second nature. But if you don't practice, then it will not happen. You cannot go in the market and hope that you'll learn what to do when it's already happening. No, you need to have some of these basic things, right? So, Sasawa, I think that was just a quick idea on how to enter those trades. So now you're okay with that. And then, okay, we still have about 10 minutes. So, in general, the time frames. There's normally a question or discussion about time frame. What is the best time frame to trade? Well, if you are systematic, if you are strategic the way I'm teaching you now, then that question is neither here nor there. In other words,
what's up, everyone?
so
Brad Purdy here,
sorry.
and this could be yours. That's right.
Sorry. Okay, I'm trying to share the chat, live chat. So the issue and the question of the time frame to trade will depend a lot on you, on how much time you have.
Risk management is probably the number one thing I wish I knew about at the start of my trading journey, because I didn't know.
Sorry, I'm trying to share chats, and it's not loading very quickly. Yeah, so like I was saying, as the chat loads up, okay, the choice of the time frame will depend a lot for you now, based on your availability, on the time that you have. Okay, which means if you're at work, then clearly you cannot be in front of the computer, maybe the whole time, But if you know you have certain time, all right, then that's what you do. You choose a certain time, and during that time, and for me as a scalper, I don't require a lot of time. No, even that 1 hour that I have or 2 hours is enough for me to enter the market, take some trades, and get out. That's it. That's simple as that. Okay. So this is your charts. Okay. And I'm going to just expand on one. At least now you're not as scared as probably before on what you had. So in this chart, the first thing you need to do is you need to identify which time frame you want to trade. If you're going to trade on the 5-minute time frame, then you use the 30 minute for your structure, okay, and maybe the 1 hour or 4 hours for your direction. All right. So in this one here, If I go to the 4 hour, I see the 4 hour is in consolidation right now. Okay, but it looks like it wants to go to break up. So I will look at this and I see if I draw trend lines. Okay, so this is a low. Okay, these are higher lows. Okay, so this is a higher low, goes up, an even higher low. So clearly, this market is trending upwards, but forming a very interesting shape. And this is what we should see on a detail on the next smaller time frame, because this is 4 hours. So 4 hours was just giving me direction. So I know that the market is going up, something like that. But if I go on a smaller time frame, which in this case is 30 minutes, then I start seeing a little more detail. What is the structure? Well, it's going up, but it's consolidating. It means it's going to form a breakout somewhere here, which means if I'm going to go to the 5-minute time frame, in my mind, I'm expecting the market to go up and break out, which means in our strategy, now please remember, in our strategy, that is what we do. We literally find when the market is going down, what do? We buy. Why? Because we've determined that the market is going on a breakout somewhere up here, which means in the timeline that I'm actually going to trade, I know that the market right here is trying to break out. So as a scalper, every time this market comes down, I buy. Comes down, I buy. Comes down like now, I buy. So I look for an opportunity to buy. You enter your trade on a buy. Okay. The same thing happens to other time frames. So I think I shared a slide that tells you the times or the timelines. Okay. So like now, I trade on the 5 minutes. So I use the 30 minutes and the 4 hours. So 4 hours I use for direction. I know the market is going up. Okay. Then 30 minutes, I know it's also going up, but it is forming a wedge, like a rising wedge. Hence, as I enter on the 5 minutes, I look for opportunities to buy. So there's a confluence. It's going up, up, up. So in my trading on the 5 minutes, I look for opportunities to go up, which means every time the market came down this way, I was buying. When the market came down this way, I would be buying. And the market comes down this way, I would be buying. Why? Because then it will retrace and go up. Retrace and go up, retrace and go up, and then finally might break out. All right. But see, at this point in time, this is my immediate concern. I would be doing buys. All right. I can continue explaining that same point, but the only way you'll know it is by practice. By practice. So I do have like a minute and a half. You can start asking questions.
So my quick question.
Yes,
Coach,
yes.
you talked. You have been talking about when the market is going down. You said now it is the other way around. Seeing maybe the pattern is growing. Maybe there is a learning that you need to know around that. Because all along I've been saying when the market goes down, it's set.
Okay. Yeah. All right. I think we have less than 1 minute. The beauty about what we have now, I've set up we can all log out and then log in using the same link. Please look at your WhatsApp or whatever link you have to log back in. So what I will do, I will stop this session and then we log in and now we can ask questions. Now, For those who must have to go to work, it's okay, you can leave. This other part now will be mostly question and answers. And clearly, I see there are questions. So let's get out and log back in on the same. Sawa. Okay, we can log out. Okay.